Hi everyone, this is Craig, the options linebacker. This is the weekend report for Sunday, April 4th. I'm going to start off today's analysis by looking at the S&P 500 from the monthly and weekly basis. So when we zoom out and look at the longer time frames, we can see bigger patterns happen. So as we look at the recovery from the last recession that we had, which started in 2003, the recovery was, we saw an initial big move up off of the bottom, and then a much more gradual uptrend from there, which lasted about 2.5 years. And then the last segment of that bull market from 2003 to 2007 was straight up, just like the first part. So we might expect a similar pattern as this bull market plays out. So it's a year old now. It's come up off the bottom very, very strong, which is just a mirror of how hard it came down. So this totally makes sense when we attack it from this perspective. But now what we're trying to figure out is whether or not it's going to move into that second phase, which is a little bit more gradual. And the reason for that is because if we look back on some of the macroeconomic things that were happening during this time, Greenspan and then Bernanke was ratcheting up the interest rates every single period until it got to about this point here, and then they stopped raising. And of course that almost signified the end of that bull market. Right around the time that they stopped raising the rates is right around the time that it flamed out. So we're looking at a period here pretty soon. Now we're starting to see some job growth now, month over month job growth, and very likely by the end of this year we'll see a lot of pressure to start increasing interest rates. Now when that happens, there's a lot more competition for the investing dollar. All of a sudden bond yields go up, and all of a sudden you can make equivalent money with a little bit less perceived risk just putting it in the stock market. And that is why it makes sense to see the biggest moves up off the bottom and more gradual moves in the middle, and then the biggest move in the very end, which is when the retail money gets involved in this and chases the top higher. But as I move over to the weekly chart, this is where I think we might be at an inflection point, because you can see this, that the chart is just starting to round over the slightest bit. And I drew this trend line here several weeks ago, and it still seems like it's playing out to the upside. So we're seeing some incremental growth along here, but it certainly has slowed down from when it came up off the bottom. The other thing to note here is in this bull market that we had from 2003 to 2007, we really did not have so much as a 38.2% pullback, which would be look like something like this. We just didn't have any normal pullbacks, and this is really the effect of all that liquidity, because the printing presses were in full speed back here, flooding the market with dollars, trying to rescue this recession. And it certainly did, and it fueled, because of all the low interest rates, it fueled the housing boom at the time. Now we have a similar thing here. We're still waiting for the housing boom to kick in, but we have essentially zero rates, which is why we have this strong move up off the bottom. Now let's zoom into the daily chart. Again, kind of the same story that we've been talking about for the last couple of weeks, is that we've been seeing these bearish divergences showing up on the MACD histogram, and now the stochastics as well too, as we make higher highs in price but a lower highs in the indicator. So we're definitely losing momentum in the charts as we go higher. The other thing to notice here is the Bollinger Bands are right overhead, and actually they're starting to squeeze together again, similar to what we had back here. So as the charts consolidate sideways, you'll see this Bollinger Band squeeze, and eventually it's kind of like gripping in a wet orange pit with your fingers and pressing really hard. You know it's going to go flying out of there, you just don't know which direction. Now, the other thing that we see which supports that divergence, the number of daily advancers is starting to tail down. So we're starting to see a bearish divergence in the number of stocks that are actually making new highs on a day-to-day basis, while we're still making higher prices in the market. So what does that tell you? Well, unfortunately, it doesn't tell us much of anything at all. All it tells us is that when we look at the price chart, the price is still creeping higher. So day by day by day, it's still creeping higher. Now, everybody keeps looking for a pullback, but as we've noticed before, when we compare this type of move that we had in this type of pattern with equivalent patterns that we've seen in the past in similar types of markets, that these moves just don't give a chance for anybody to get on board. The analog that I've been bringing up for the past 2 months is the one that we had about 3 years ago, and in March of 2007 we saw a very similar move to the downside and then a strong move to the upside, and then this was the point where everybody tried to go short and they got completely run over backwards, as that's when the smart money started to buy. And as you can see, there was just no chance to get on board. You had these one-day wonder pullbacks before the next move would come along. Now, the warning shot over the bow when the party was over is when we saw a prior swing low get taken out. Notice how that this low here was lower than this previous low. So a prior swing low is taken out. That's the first shot over the bow. And then when we made a lower high here, this is when we started to kind of walk sideways. And then this is what I call a pop and drop move. This was done on very low volume. This is where the big boys say, you know what, I need to get out of these positions. And effectively what they do is they will crank up the market and then sell into the strength at that point. And as you can see, this is where things really started to fall apart in 2007. So we may see something similar now in 2010, is that we may see these just sort of moves that keep going higher and nobody gets a chance to get on board this thing beyond the point of belief. Actually, is how it felt back then 3 years ago. Nobody could believe that this thing just would not stop, and we're going through something similar now. But again, what happened was when finally everybody got on board, then the first shot over the bow said that the party's over. We moved into a sideways move, and then the party was really over after that. So as we go back to today's chart, we're certainly, kind of walking sideways up here, but there's just been no pullback since the end of February. This thing has just been motoring higher, grinding higher, and actually, as we look at it, it's actually consolidating as it moves higher. Now, there is one line of resistance overhead, which is a fib extension at 127%. The next one would be up at around the 1216 area on the S&P. However, I think we'll have a little bit of resistance overhead here at the 1200 round number resistance. Look at how long it took for the S&P to really effectively get over the 1100 level, and then when it did, it wasn't for long. So here's what I see happening in the week coming up forward. It depends on what happens with the Friday jobs report reaction as to whether the markets will sell the news on Monday. If they do sell the news, I don't think they're going to push it much lower than the 1150 area. I think if we push down to support here at 1150, I think that will be a dip that will be buyable, and I think that they'll push it up here again, even if 1200 is going to be overhead resistance for the time being. So I think what we're doing is we're going to be stuck in a box in this area for probably the next month or two. Now for our Iron Condor positions for April, there's just a couple of weeks left to go, and they're hundreds of points out of the money on the S&P contract, so there's really not much to do but just let them expire worthless. And for May, we have some small positions. We set up an initial condor that we're going to leg into, whether it's the upside or downside, depending on how the market moves from here. So the initial condor is set up. We have the price near the center of that condor. There's not much to do but wait for it to move. Sometimes it can be like this in a waiting game. So that's it for this week's report, folks. Thanks for watching. Now before you go, we are consistent. We've made a monthly profit 14 of the last 16 months through some pretty heavy volatility. 7 months in a row profitable now. Join us at optionslinebacker.com or send us an email. We do have an upcoming live webinar to learn the skills of managing your portfolio and active risk management. $99 gets you 3 hours of instruction plus a recorded archive. Go to the webinars tab on the optionslinebacker.com homepage for more information and to sign up. And while you're there, don't forget your free report. Go to the free stuff tab on the optionslinebacker.com website. Take care, folks, and good trading to you this week.